I'm Becky Quick of CNBC and your host of The Forum. I'll be guiding you through exclusive conversations among some of the world's global leaders. Conversations previously held behind club doors, but today we invite you in. The Economic Club of New York serves as the premier forum for nonpartisan discussion dedicated to connecting the world's brightest minds with preeminent public and private sector leaders. A nonprofit 501c3, the club is a 115-year-old platform for the conversations that help shape the future of our world. The Economic Club of New York, brightest minds, critical conversations, catalyst for innovation.
It's true that markets have sort of moved in the direction of many of us as economists who've said it was a bit optimistic to think a lot of rate cuts were in the offing, yet still markets tend to be perhaps a little bit more sanguine than some economists looking at the data. What do you see as the outlook both for inflation and rate changes from the Fed?
Let me start with an analytic judgment. Glenn, recognizing that nobody knows and nobody can be certain, and that there's probably been a little evidence that would modulate the view that I'm about to express in the last week or so. My best guess is that the neutral rate of interest is in the 4.5% range. That is radically different from what the Fed says when they say 2.6. And if correct, has very substantial implications for monetary policy. If the neutral rate at present is in the range of 4.5%, then monetary policy is not substantially restrictive. There's no compelling warrant for easing monetary policy, and markets should be getting used to rates in current ranges for the foreseeable future, and probably long rates above current levels, because long rates are discounting a very small term premium and a fair amount to Fed cutting. And if neutral rate really is 4.5%, that view is substantially off.
Yeah, I would broadly agree with those points, Larry. I do think inflation at the moment is stuck well above the Fed's 2% inflation target. I know there's some points of view that it's really a measurement issue with things like shelter inflation. But if we're going to talk about PCE, less food and energy, that's that. And even the shelter inflation numbers coming down a bit are still higher than they were on a year-over-year basis. And indeed, at current shelter inflation, everything else would have to be zero to get you to 2%. So I think we're not at a good level. I agree with you. If you look at the labor market and sum up actual jobs and job openings, the labor market still is holding up fairly well. There's some weakening, and I expect some weakening in the employment numbers. But broadly speaking, that seems to be holding up well. The economy is growing above most economists' measures of potential at the same time. It strikes me that there are a number of implications of this view. One, it might have been surprising a few months ago to just not see a recession in the offing with this. If you were to say to me, let's raise rates really fast to a different level and hold them there and not see a recession, that might be unusual. I do think we're going to see an economic slowdown coming, and planes don't stay in the sky forever. They land. They either land softly or not softly, but they do land. And I expect a relatively soft landing, but a landing it will be. I think there are also other implications. An important one is the fisc. It's very different borrowing money at near zero and borrowing money at 5% when you have very large structural deficits. And I think we're only beginning to have that conversation as interest payments exceed payments the defense interest payments exceed national defense. And then finally, there could still be implications in financial markets that we haven't seen yet from interest rates at this level. So net, I think a slowdown is coming, but I don't see a very large recession. One other factor I would mention and get your take on all of the above is politics. I'm rarely worried about politics and the Fed. I mean, there are Fed chairs who've been appointed by Republican presidents and Democratic presidents, but they're technocratic individuals who do their jobs, whether you or I would agree with everything they do. I'm much more worried about politics, actually from both of the major party candidates. And I do think the Fed's independence remains important.
Yes, on the Fed's independence. I've certainly over time been critical of certain aspects of the Biden administration's economic policy, but I would say they have been much, much, much better on issues related to Fed independence. The gap is even greater with the kinds of President Trump has said about his intentions in office. So I'd agree with you on independence of the Fed, but I would reject any idea of symmetry of sin in that regard. I think I'm a little less certain than you are about the slowdown in growth, though the data in the last little while has come in on the soft side, but we'll have to see.
2025 is going to see a big tax discussion, not because you or I care about it, but because of the expiration of parts of the Tax Cut and Jobs Act of 2017. And that bill or that law, of course, did have very significant reductions in corporate taxes. Many economists believe that was very good for investment, maybe modestly good for growth. It also had some things that raised some concerns of a lot of temporary tax provisions, some of the tax treatment of multinational companies. There's arguments on both sides. Many of the provisions, particularly individual provisions, are up for grabs. Wanted to just get your take on what do you think we should be talking about in 2025 in reforming the law, whether it's corporate changes, which needn't happen but could, and individual changes that must happen.
One of the other realities that I think people have insufficiently faced is that whatever you think about the size of government, different people will have different values. I've traditionally been for more government than you've been. But whatever your values are, I think you have to recognize that a much larger fraction of the population is old than used to be the case, that the relative price of the things government buys has gone way up. Think about the price of a year in college versus the price of a television set. According to the CPI, the relative price has changed by a factor of 100 over the last 40 years. And so with more aged people, the size of government is going to have to go up. And that means that I think as a country, we need more tax revenue, not less. And it's not realistic to think that on net, we can cut taxes from current levels. And in all likelihood, taxes are going to have to rise. My judgment would be that the Business Roundtable position for many years was that a 25% corporate tax rate would be a terrific outcome from the point of view of corporate America. I think they were right. And I think raising the corporate tax rate to something in the 25 to 28% range would be in the country's economic interest. At some point, we are going to have to get over the political taboo that revenues can be raised only from the top 1% of the population and find ways of raising taxes more broadly. I, like most economists, have the orientation to broadening the base. So I think we've got to approach this with nuance and also with realism that we are going to need more tax revenue in the future.
Yeah, I think you've teed up some really good themes, Larry. I would break it up into two conversations. One would be the literal 2025 TCJA fix conversation, and the other the longer term about the size of government on TCJA, we can't just extend it. It's $3.8 trillion over 10 years. All the arrows, as we would both agree, are pointing up in terms of defense spending. I don't know if 5% of GDP is the right number, but where we are now clearly isn't the right number. And interest payments on the debt, per our earlier conversation, are going to be higher. So that's just not a cocktail that mixes well. That said, when I look at the 2025 conversation, while I agree, if one had to, one could modestly raise the corporate rate. It's certainly not where I would start. In the individual side, I would try to focus extending tax cuts for middle income people, not for upper income people, and do some base broadening on the individual side of the code. You could get close to a revenue neutral extension of TCJA with some of that. But the bigger question, as you said, is about the size of government. While you and I may not agree on what that ought to be, I think we both agree you should pay for it, whether it's a smaller one or a larger one. If the public wants a larger government, I'm afraid TCJA and that discussion isn't the right discussion. We either need to have a discussion about a new tax system, which would be a broader income tax base or a consumption tax, and or a significant restructuring of the entitlement programs. Those are the only two discussions to have. As you said, I don't think it's possible to imagine getting out of the fiscal hole solely on the backs of the well-to-do. There's just not, rich people are rich as individuals, but taken together, there's just not enough money there. So the public has to be willing to have a conversation, whether it's on the tax side or on the benefits side, but that's a conversation we have to have.
Would you like to be a part of the conversations at the Economic Club of New York? Learn more about membership, the New York City and National Fellows programs, and other opportunities for engagement in the club at www.econclubny.org.
I wanted to ask you something going into the election. Why do you think so many Americans are unhappy about the economy, even if much of the data you or I might look at tells a different story? To my mind, it's probably a mixture of things about inflation being very high for a period of time. We can say inflation's coming down, but the arc of inflation, sort of 2019 to the present, has concerned many Americans. Concerns about immigration and concerned about fiscal challenges. What do you think is in this cocktail? Why are people so unhappy?
I think you and I are focused on fiscal challenges. The bond market's not all that focused on fiscal challenges, and I don't think Americans at their kitchen tables are all that focused on fiscal challenges.
I think the impact of higher interest rates on car payments, on mortgage payments, on credit card payments has raised the cost of living as it's experienced by families, even if those things do not show up as part of the consumer price index.
No, that's a very good point. So if I may, let's go from how people feel now to a post-election agenda. Barring some oddity of RFK Jr. becoming president, it's going to be the current president, Joe Biden, or the past president, Donald Trump. How should we think about their economic agendas? What's different about them? What's similar about them? I have my own thoughts, but I'll start with you.
Look, I think the Trump economic agenda is really very highly problematic on the inflationary side. Between the disrespect for the independence of the Fed, the strong signals about the desirability of a weak dollar, the desire for tax cutting absent any programmatic commitment to spending cutting, the imposition of unprecedented in the last half century tariff policies, that there is likely the restrictions on labor supply through immigration, I think the Trump economic agenda is likely to be very substantially inflationary from here. And I'm not sure I see any real economic problem, slowing economic growth, that the Trump administration has talked in a serious way about addressing on a go-forward basis. So I find that economic agenda to really be quite alarming in terms of inflation and financial stability. I wish the Biden administration agenda was more spelled out. I would like to hear more about plans for fiscal sustainability. I'm concerned about the degree of interventionism in the economy. But I think there is much more recognition that we need to respect our central bank and respect our currency. I think there is less instinct to pervasive, large-scale protectionism as an approach. I think there's substantially more commitment to research and development for competitiveness in key technologies, whether it's artificial intelligence or whether it's clean energy. So I am much more optimistic about the economic prospect on that agenda than I am on the Trump agenda as it now appears.
Yeah, I think you certainly touched on some of the differences. I might put it slightly different. Let me start with where I think the two are similar, and they're often similar in ways I don't like, to be honest. So similar in advocacy of protectionism. You pointed to inflationary effects of tariffs, but of course, while that's true, President Biden too is embracing that agenda. So the similarities are about things that are perhaps less good from an economic policy sense. On differences, I think there are some pronounced differences. In tax, I think there will be big differences both in how TCJA is approached, and as we talked about, it has to be approached in 2025. I don't know that either one plans any kind of long-term discussion. I'd be surprised if that happened. Regulation is another big difference. The Trump administration was a period of much less regulatory activity than the Biden administration has been. So I know past isn't necessarily prologue, but that I would expect to be a big difference. And the Inflation Reduction Act, which unlike the CHIPS Act, has less of a bipartisan support. So I would expect to see a different attitude toward the completion of spending plans in the Inflation Reduction Act, whether President Biden is reelected or President Trump is elected. I spent some time also thinking economically about, are there surprise scenarios we ought to be worried about? So one of them that's on my mind is, could there be a fiscal and financial market reaction to very heavy public spending, tax cutting? We have not seen that, but that's clearly something of worry. Politics in the Fed, I actually do think neither side is doing a great job here, and I do worry about a new Fed chair who's substantially more political than the Fed chair that we have. And neither side seems to be that embracing of how to really integrate AI into the economy. But I don't know if you had any further thoughts on those points or others.
Glenn, we probably both have longstanding traditional loyalties that may be influencing our views here a bit. I would really very strongly reject any suggestion of symmetry of sin on protectionism. Seems to me that there's every reason to think that there will be far more in a Trump administration. All one has to do is read Bob Lighthizer book and to see that. I think there are substantial differences likely in respect for the independence of the Fed, and I think that is pretty consequential. I think it's hard to do broad brush evaluations on total quantities of regulation. I think you have to look issue by issue. And we may have a difference, which is I really do think that climate change is an existential challenge, that it's central that if the world is going to address it, that the United States be addressing it actively, domestically. And while I would probably prefer more emphasis on higher carbon pricing, I think that there are substantial benefits to providing support through regulation and through subsidy instruments for green technologies. You know, the fact is, Glenn, that while I was very unenthusiastic during the Obama administration about the substantial strengthening of the CAFE standards, those mandates actually did drive substantial increases in energy efficiency that have had very substantial environmental benefits. And I think it's a mistake that because it's not in the classic corpus of classic economic theory, that we economists probably devote too little attention to the possibility of some desirable technology forcing through regulation. At the same time, there are other areas, certain excesses in the antitrust area, for example, where I would hope that a second Biden administration would be less activist and less regulatory than the first one was.
Well, it's interesting what you say, Larry. I certainly agree that while price signals are the best, sometimes we have to be in the world of the second best. My point on the IRA was really that Trump and Biden are going to be different in how they handle it. On antitrust and Lena Khan, I would note with some irony that Senator J.D. Vance, who's one of the potential contenders to run with Mr. Trump, says that's his favorite Biden appointee. So maybe there's more similarities, again, not necessarily in a good way, in thinking about antitrust. I want to take a minute at the end to go to our long-term home of decades, which is university life. And universities are places where ideas come and ideas are debated, and people can and should feel able to disagree. We're seeing across elite campuses all over the country, particularly here at Columbia and particularly at Harvard, this coming to fore. My own view is universities probably were saying too much about a lot of things without thinking them through and without clear time, place, and manner restrictions on how to engage. But I don't know, what do you think?
Yeah, look, it's a long subject. I'll just say this. I've been shocked and horrified by the pervasiveness of left-wing anti-Semitism on college campuses. One simple test I use when I hear advocacy of what are hugely legitimate Palestinian grievances against history and against the status quo is, does the advocate mention anything that is hurting the Palestinians other than the Israelis? And if they don't recognize any sin on the part of Hamas, on the part of the Arab world, on other parts, I have to say I become uneasy about their motives. So I think anti-Semitism is shockingly present in American life, much more than I would have expected, and a real problem on college campuses. And I think it's increasingly being normalized. Beyond that, I would just say universities, I think, need some return to tradition. And that means an emphasis on truth more and social justice less, opportunity more and identity politics less, excellence more and mutual self-esteem less. And I think it's important to recognize that pendulums swing, and I suspect there may be a bit of a swing back from the very severe excesses that we saw on a number of campuses this year.
I agree and hope you're right.
You've been listening to The Forum by the Economic Club of New York, a nonprofit 501c3 dedicated to connecting the world's brightest minds for critical, nonpartisan conversations. Be sure to subscribe now to be alerted to future new episodes. Would you like to be a part of the conversation at the Economic Club of New York? Learn more about membership, the New York City and National Fellows programs, and other opportunities for engagement in the club at www.econclubny.org. I'm your host, Becky Quick. Thanks for listening.